So a while back, I created a video about whether or not the IRS can garnish your Social Security benefits. Link to that video here at the top of the screen. And on that video, a viewer recently commented, just found your channel and subscribed. Can SSDI Backpay be garnished by the IRS for unpaid business taxes? This is a great question. This is a phenomenal question, right? Because it's really two questions in one. One is, does the IRS have the authority to garnish SSDI benefits? Right? Social Security Disability Insurance benefits. I'll talk about what that is in a bit. That's question one. B, can the IRS garnish SSDI not just for personal taxes, but for business taxes? Okay, so I'm gonna get into that aspect of it later in the video. But now up front, especially for those of you who are like, what's SSDI? Let's get into this. For the benefit of everybody here. What is SSDI? SSDI is Social Security Disability Insurance. Okay. It is obviously based on one's disability status, generally a permanent disability, right? Something that's a disability that will last for a year or more or is likely to result in death. And it's also based on the individual's contributions into the Social Security system during their working years. This is not to be confused with SSI, Supplemental Security Income, which is strictly a means-based program, right? Without respect to how much the individual contributed into the Social Security system during their working years, right? There are disabled folks who get SSI. There are those that receive SSDI. There's also state programs as well. And neither of these two, SSDI nor SSI, are to be confused with just the good old Social Security retirement, right? Which is obviously based on your contributions made over your working years. Okay. The IRS, as I mentioned in this video, you can the IRS garnish Social Security. They can garnish your Social Security. Okay. They can do it. They can do it up to 15% as part of the federal levy program, which is kind of a more or less an automated thing, right? They can manually garnish more than 15%. The federal government cannot garnish SSI to pay federal to pay your federal back tax debt. Okay. What about SSDI? For these purposes, SSDI is treated the same as Social Security, except so SSDI cannot be levied or garnished through the federal levy program, the 15% kind of automated levy thing. Okay, and the IRS made has a little article on its website about this. Social Security benefits eligible for the federal payment levy program. Beginning in February 2022, Social Security benefits paid under Title II, Federal Old Age Survivors and Disability Insurance benefits, will be subject to the 15% levy through the federal payment levy program to pay your delinquent tax debt. Okay. However, as of October 15, 2015, IRS will no longer systemically levy. Okay, so there's when the IRS talks about things systemically, it means it's just part of the system. It's how it works. There's a lot of automation there. This is kind of inherently how it works. This is different than manual levies, where a specific person working at the IRS, a collections official such as a revenue officer, has to issue a specific levy notice for a specific thing, such as your Social Security or SSDI, right? So SSDI benefits can still be levied, but they can't be systemically levied through the federal payment levy program. Okay. The old age and survivors benefits, that's good old Social Security retirement, will continue to be levied at 15% through the federal payment levy program to pay your delinquent tax debt. Okay. So yes, the IRS can take your SSDI. They can take your SSDI back pay, but it's harder to do than normal old Social Security. Okay. There'd have to be a manual levy involved. Generally, we don't see these out of ACS for SSDI back pay. Generally, this would be if there's a revenue officer assigned to your case, a high-level collections official who discovers that you have an SSDI back pay issue, pending payment, monitoring, and who can place the levy order, right? Or the levy order into your bank account. And I'll get to the whole business component here as well, right? But let's just finish this right up on the IRS website just for the sake of completeness. Lump sum death benefits and benefits paid to children are not included in the federal payment levy program. Additional supplemental security income payments under Title 16 and payments with partial withholding to repay a debt owed to Social Security are not levied through FPLP. Beginning February 2011, the federal FPLP is Federal Payment Levy Program, by the way. The Federal Payment Levy Program excludes certain delinquent taxpayers who receive Social Security payments if their income falls at or below certain established levels based on the Department of Health and Human Services poverty guidelines, right? So, and again, FPLP is the kind of somewhat automated 15% levy program. Again, all bets are off with a manual levy, okay? So kind of some of the exclusions they're talking about here, like with the poverty guidelines and et cetera, only apply to that 15% automated levy. Now, just like with any levy, okay, a levy is just the IRS taking your stuff, taking your money, taking your wages. Before this happens to you, the IRS does have to give you a final notice of your intent to levy with appeal right, your right to a CDP hearing if one has not been already issued, okay? They said if we don't hear from you, if you already received this notice, we will send you an additional CP-91 or CP-298 file notice before levy on Social Security benefits. Explain that your Social Security benefits may be levied. And like with many notices, you have 30 days to figure things out before they start going after you after you receive that CDP notice. Okay? Because the FPLP is used to satisfy tax debts, the IRS may levy your Social Security benefits regardless of the amount. This is different from the 1996 Debt Collection Improvement Act, which states that the first $750 of monthly Social Security benefits is off limits to satisfy non-tax debts. Okay, 15% of the Social Security benefit will be levied through the FPLP regardless of whether or not the remaining benefit set to you is less than $750, right? So for many debts, they can't touch the first $750 of monthly Social Security benefits. I'll bet that is not the case with federal tax debt. Okay. And then you're sitting there, hey, what about state tax debt? States can't touch your Social Security. Okay. All right, now let's talk about the business component of this. So we've established that the IRS can garnish, let's get the question back up, SSDI as well as SSDI Backpay manually, not through the FPLP. We've established they have to give you notice in order to do so, including your notice of the right to a hearing. Okay. Now, what about for tax debt from your business? Now, the commenter didn't specify exactly what kind of business debt this is. If you mean tax debt, let's say you set up a single member LLC, never elected to be taxed as a corporation, you report that income on your schedule, see, that's business income, right? And you owe regular income tax and self-employment tax on that income. Yes, the IRS, if that's the kind of business tax you're talking about here, then yes, that can be levied from your SSDI back pay. Okay. What if you had a corporation and your corporation owes income taxes, corporate income taxes? Generally, no. The IRS isn't going to be able to touch your SSDI to pay your corporation's corporate income taxes. Now let's talk about payroll taxes. That's the other big tax that a business might pay. Okay, payroll taxes. Payroll taxes have two components. One component is the component that the employer pays on behalf of the employee. Okay, so if you're an employee, your employer, for example, pays half of your Social Security and Medicare taxes on your wages, and you pay half of your Social Security and Medicare wages. It's taken out of your paycheck, and your employer sends it to the government, right? If we're talking about those former kinds of payroll taxes, right, the employer's share of payroll taxes, the IRS can't go after you personally, can't go after your SSDI back pay for those. Those latter kinds of payroll taxes, right, taxes that the employer takes out of the employee's paycheck, right? The employee made the money, right? They make X an hour, they work these hours a week, right? Their gross pay is this, and then all these withholdings are taken out, right? It also includes their federal income tax withholding, right? So that money never touches the employee's account. It stays in the employer's bank account to then pay to the government. See? These taxes are known as trust fund taxes because the employer is supposed to hold them in trust on behalf of the employee and then remit it to the federal government. The IRS, the federal government, really, really doesn't like it when folks cheat them on these taxes. Okay? More so than regular income taxes, more so than corporate income taxes, individual income taxes. Why? Because let's say that you're an employee and your employer withheld $10,000 from you during the year. And you wouldn't know this, but let's say your employer didn't send that $10,000 to the government. Not only does the government get ripped off here because they don't get the $10,000 in the government treasury. Oh, but regardless of whether your employer actually remitted the payment or not, they still have to give you credit for the $10,000 federal income tax withholding on your tax return. Okay, so you can see why the government really hates it when businesses and business owners rip them off with their trust. And I'm using rip them off because that's what the IRS thinks you're doing, right? By failing to remit the trust fund taxes, right? Now, in many business owners' minds, they're doing the right thing, right? Man, should I, pay my vendors that I need to keep this business running, or should I pay the IRS payroll taxes? I'm going to pay the vendors, and hopefully the business can catch up cash flow wise to pay off the government later. Government views themselves as the first creditor you should pay. Their guidelines say you should pay them their payroll taxes before you pay your employees. Give your employees like a partial paycheck, but as long as the government's taxes are, payroll taxes are paid, right? That's the IRS's mentality here. So please don't be offended if I say, rip off or use phrases like that. These trust fund taxes, payroll taxes, specifically the payroll taxes withheld from your employees' paychecks, the IRS can go after you personally through what is called the trust fund recovery penalty. This is where they make an assessment against responsible persons in the business. It's not always just the business owner. It could be, the CFO, someone who's in charge, who can sign checks, right? Someone who's in charge of payroll. There isn't even a case where they went after a bookkeeper for the trust fund recovery penalty, and he didn't appeal it in time, and he's stuck with it, right? So I think I don't know if I made a video about that or not, but I have made videos about the trust fund recovery penalty. There's a link to one of those videos here at the top of the screen. So they can go after, they can take your SSDI Backpay, SSDI, Social Security, whatever, to collect this trust fund recovery penalty, right? Which is the employee's share of payroll taxes that were not paid to the government. Okay. Now, let's say that you are in the situation where the government has gone after you, your SSDI Backpay, let's say, for these unpaid business taxes, trust fund recovery penalty. What are your options? It's just like any other personal collection case at that point. In a full payment installment agreement, partial payment installment agreement, penalty abatement, CNC status, offer and compromise, right? You can attack it any of those ways. See? Before I wrap up, what about sales taxes? Right? That's a business tax. Maybe that's, I took the question off, but maybe that's what you're referring to. Sales taxes, most states consider them they consider them a trust fund tax, right? Because you sold an item for $9. Let's say there's a 10% sales tax. So you actually collected from your buyer, what is that? $9.90, right? You collected that. And just like with payroll taxes, you're expected to hold that 90 cents on that transaction, along with all the other 90 cents and whatever from all the other transactions. You're supposed to, the employers or the business is supposed to hold that in trust and then send it to the state, right? That's their sales tax. It didn't come out of the business's pocket. It came out of their customer's pocket, right? And it got deposited into the business bank account, right? But they're supposed to hold that money, those sales taxes, in trust and remit it to the state, right? Because this is a state level tax, the states cannot go after your Social Security or your SSDI Backpay, and obviously your SSI for these. Okay. The federal government can. And you cannot, and I believe in many cases the only other type of debt where that can attach these things are like child support payments, right? Back child support. Okay. So I hope this was a comprehensive answer to what, on its face might look like a simple question, but, we had to kind of get into SSDI versus SSI versus Social Security, retirement, and then, okay, business taxes. Well, which business taxes? I kind of covered them all just for the sake of not only the individual who asked this question, but also for others who may be struggling with the same thing. If you are struggling with tax debt, unfiled tax returns, reach out to us, Choice Tax Relief. Schedule a free consultation. Got nothing to lose. 866-8000-TAX. That's 866-8000-829. Or visit us at choicetaxrelief.com. Fill out the form on the website, and we will reach out to you. I also have some other videos here on the left-hand side of your screen for your viewing pleasure and education and, yes, even entertainment. Thanks so much for watching, everybody. I'll see you in the next video. Bye-bye.